Hey everybody, how's everybody doing today? Welcome back to Mad Money, coming to you live from Trinidad and Tobago. Somebody asked me to do a portfolio update, and before I really get into it, I apologize. I'm having problems with this microphone still. It shows up sometimes, and then sometimes when I actually go to record, like just when I just started to record this, I did a sound check and it said it was working, and now it is not. So we're going to work through it, and hopefully you guys can hear the audio okay. Some of you in the past have said that my laptop audio is quite poor, but at the moment we're working on a solution. So looking strictly at the portfolio, for those of you who have not been involved in the channel at all, I have around a $300 or so $1,000 portfolio, of which I mostly talk about my individual brokerage account, my YouTube Moolah account, my Roth IRAs, Cardone Capital, personal savings, and a couple other really small accounts. What I generally don't talk about is because I can't necessarily pull out the dividends from it, is my 401k. So I generally focus on this 2/3 of the pie chart here. Some of you guys might be familiar with how I split up my portfolio. Maybe before we get into this, I'll kind of move this little window over here so you can see how I have it split up here. Generally speaking, what I do is I look at the total value of the portfolio and what it's in terms of different sectors, fundrise, ETFs, what have you, and what that income percentage is to see if I'm somewhat diversified. I don't necessarily concentrate on diversification per se, more so go with a gut feel of what I think is currently doing well in the market at the moment and what I'm comfortable with. And so this is kind of how it breaks down. From the actual income of the portfolio and the actual total value of the portion of the portfolio that I talk about, it's around $202,000. And from that, I get around $10,000 worth of income. Current yield is around 4.8%. Yield on cost of the portfolio is around 5.9%. Don't need to worry about these. This is just the approximate monthly income that I'm going to get in the next 12 months or so. Scrolling over a little bit to the right, you can see I have things split up somewhat like I did in the table. On the left, I have the sector weightage of the portfolio, so how much total dollar value is in each sector. And on the right, I have the income percentage, so what I'm actually getting in terms of income. Of that $10,000, what sector is it exactly coming from? Is it coming from ETFs, fundrise, what have you? And you can see most of the time, people recognize, if they've been following the channel for quite some time, energy is mostly where my income comes from and the total stock value is in my portfolio. And then it generally follows pretty heavily with financials and real estate thereafter. That being said, if you've been following a little bit more recently, I have been diversifying more into the smaller section of this pie here, whether it's consumer discretionary, consumer staples, healthcare materials, telecommunication services, what have you. And this, at one point, I think the total actual income coming from my portfolio was over 40% coming from energy stocks, like oil and other energy stocks like that. So I have been getting better about getting away from specifically focusing heavily on oil and what have you, just because I think that some of them have grown a little bit, and also because don't want to have too much money in one sector. And yeah, that's basically it. Down here is just basically all the stocks, but this is kind of useless because sometimes I have different stock position or the same stock position in multiple accounts, so sometimes it gets checked off twice, if that makes any sense. So for those of you who also aren't familiar with the channel, I generally track things dividends by month and how much average I'm making per month. 2019, currently on track to make around $726 in income. So I'm over what I was expecting to make in terms of my goal for this year. And by next year, I'm hoping to make around $1,000 a month. So that's basically that. I track everything by month here. But I think what you guys are most likely interested in most, and I know I just kind of repeated myself there, but is most likely the actual what I actually have. And unfortunately, it's not in a very organized manner. And so what I might do is shrink some of this down here and actually think that what I have on the screen is probably best because you get to see the payout per share, the shares currently, And I guess just for your reference, I keep track of a lot of things, what I purchased it at, what the cost basis was, what it currently is, what my current return is, and my forward annual payout from that. So what I might actually do is shrink this down so you're actually able to see pretty much everything. So if I scroll a little bit over here, you're actually able to see the ticker symbol, the company name, the yield, what my current yield on cost is, payout per share, how many shares I had originally when I purchased it, how many shares I have now, and the forward payout. So what this doesn't include is some of the stuff over here to the right with some assumptions of what potentially the value would be if I reinvested dividends for 35 years. It's kind of just helping me project, but not necessarily real. What's on the screen right now is real compared to what I've actually been able to invest and what I've actually been able to return. So looking specifically at the individual brokerage account, which is around $100,000 or so, I have AbbVie. I bought about 100 shares of that. I've been reinvesting and over time, or not always reinvesting, but more so recently reinvesting. And that's generally a relatively new position. I have some in another account as well, but that is good for around $429 a year. BlackRock was something I invested in, I want to say about a quarter ago. Relatively recent position. That's around $80 a year. Bryn Mawr Trust have around 89 shares of that. Been trying to cost average, considering the price has gone down a little bit. It's good for about 2.5% to 3%. Dividend growth. It's a relatively small regional bank. If you're looking for a smaller bank, feel free to check it out. But that's good for about 3 shares a year, $92, which is good enough for me. Be able to reinvest those dividends and get another dollar per quarter is basically what I'm looking for. If I'm able to rate every time I get a dividend increase or dividend reinvestment, if I'm able to increase my income by about $1 and I have about 40 positions, every quarter I'm raising at least $40 or what have you, if that makes sense. Bank of Nova Scotia, bought this about a year ago, I'd say, maybe a little bit less, maybe half a year ago. Good for about $273. I have 100 or so shares of that. So BP of around $600 of income, around 240 shares of that. BP Midstream Partners, about 500 shares of that. I bought this instead of Shell Midstream Partners because I believe that BP, once it IPO'd, it went down relatively compared to what it was, and it's got a pretty decent debt to income ratio, in my opinion, and a pretty decent distributable cash flow. And I bought it at a pretty good purchase price, about a 9% yield, about what I bought it at. Good enough for about $600 a year. Cheniere Energy Partners is another energy stock, good for about $300 a year. Purchased at a pretty good price, up pretty significantly on it, I believe. I don't have the price on here anymore, but I think I was buying it in like the low or high 30s, and it's in the mid 40s now. So good enough for $300 a year. I have some Google, which doesn't pay anything, but I have 4 shares of that. Icon Enterprises, bought 5 shares of that, and I've reinvested to get almost 50% of my investment back. Good for $60 a year. Johnson & Johnson, bought 25 shares of that when it went down to 130 or so, about 3 months or so ago. Good for $95. Kinder Morgan, bought this. I'm pretty much down, I think, about 25% on this. Bought it back when it was still was it still KMI, or was it was something else. It was when it was still a midstream company, basically. And anyway, when it transferred down to a C Corp, I lost a little bit of money, but I'm reinvesting, and so you can see I'm slightly down on that in terms of yield on cost. But anyway, it's coming back for me. I'm going to hold it forever. I don't really want to sell it. Bought some Cosmos Energy, 500 shares of that. Read their annual report, and they're big explorer in, I guess, West Africa and Northeast South America. So high risk, high reward play with this one, but they also pay a dividend. So worth it, in my opinion. I either lose, a little bit of money or end up getting bought out by an oil major when they find something pretty big. Main Street Capital, I think a lot of you guys are familiar with this. It's a business development company based out of Houston. About 136 shares of this. I also have about 100 or so shares in my IRA. This is good for 400 shares, and then the position in my IRA also pays me over 400 shares. I think I get paid about close to $900 or $800, $900 just from Main Street Capital, and they pay on a monthly basis, and they also pay a special dividend. 3M Industrial Company, bought 31 shares of this. I think I bought about 15 or 20 shares, and then it dipped again, so I bought another however many shares to get me around 31 shares at the moment. Good for almost $200 a year. Altria Group, I hold this in multiple accounts, but this one specifically is about 24 shares. Good for about $77 a year. Realty Income Corp, I used to have over 200 shares of this, but with the recent price run-up, I decided to sell. And I don't know if I kept these shares or if I bought them back, but regardless, I have about 20 shares, good for about $54 a year. Really good monthly dividend income stock if you can get it at the right price, and that is the right way to look at it. Good company, but sometimes it's a little bit overvalued on a fund from operation standpoint. Pepsi, bought these shares around, I want to say $96, 53 of them to be exact, and good for about $200 a year in income. I believe they're about a 30% increase from what I bought them at about a year and a half ago or so. Phillips 66, bought them at a pretty decent price as well. I see my yield on cost is around 5.2%. Have about 42 shares, good for about $150 a year. Royal Dutch Shell, also bought them at a pretty decent price. 7.55 yield on cost, 6.5 actual yield. I used to have over 100 or so shares of these, and I sold some of them to diversify into some other companies. I think it was J&J and 3M, but I don't remember exactly. Cedro Partners, way down on this, but it's okay. Don't remember how much I initially invested, but it is what it is. Worst case, it goes bankrupt. Not too big of a deal. Happens to some of them. It'll offset some of the other great investments that I have made. So you win some, you lose some. It is what it is. Square, used to have over 100 shares of this. Did a really good return on this and sold, I believe, at 40, I don't remember, but made about twice my money on this. Stag Industrial, this is a good story because I bought 100 shares at about $20 a pop. It's around 30 or so now, maybe it's high 20s now, but I also got 23 shares in terms of just reinvested dividends, and the dividend has continued to raise. So you can see yield on cost is about 8.3%, but the actual yield is about 5. Good for about $176 a year, which is really good. Similar with Starwood Property Trust, bought about $20, continued to reinvest. Currently have about 16, 17 more shares than when I started with. Yield on cost is around 12.6%. AT&T have over 200 shares of that now, close to $450 in income a year. Verizon I hold in multiple accounts. I have over 100 shares of that as well. Good for about $260 a year. And then I have Wells Fargo, which I've been continuing to invest in for the long term. And that's good for about $450 as well. Total individual brokerage account income comes at about $5,500 a year, which is relatively good in my opinion. YouTube Moolah account is the money I get from YouTube. So I think at the moment this is around $2,000, just the money that I've acquired over the past 2 or 3 years when I've been doing YouTube, and a lot of it I invest into ETFs like the small cap S&P 500, total stock market fund, and IPI shares, and I also have about $250 or so in cash. Good for about $41 a year in total. The most I generally will just put money into the total stock market or small cap until I get enough money to invest in a single share of IVV, which is iShares S&P 500 fund. And yeah, that's about that. Now going to the IRA, specifically looking at, say, BHP, bought about 100 shares of this, I believe in 2015 timeframe. You can see the yield on cost is pretty good, about 14 or so percent, which is good for about an annual payout, about $341. I really like BHP as an investment because they specifically look at providing around 40% of their earnings or their distributed cash flow to investors, shareholders, which means if they don't make any money, you're not getting any money either, which in my opinion is fine. I wouldn't want a company to necessarily put themselves in poor financial debt in case they had, say, a bad year or so. I'd rather have something like this, which is like a progressive dividend, which if you do make money, you get money. I know a lot of oil companies in the past, they generally pay pretty decent dividends. If they have a bad year or the oil price drops for a year or so, they'll actually go into debt to be able to pay that dividend. And I don't necessarily think as a company that that's necessarily the right thing. Although it's good for consistent cash flow basis, it might not necessarily be right for the company. It actually might put the company in worse shape. So that is what it is. Take that for what it's worth. Also purchased something called Cyrus One. This is a digital real estate investment trust, specifically looking at data storage more so than digital per se. So they focus on purchasing data storage areas where they can host clouds and stuff like that. Disney bought about 49 shares of that, reinvested the dividends, get around 51 shares, 1.77% yield on cost, 1.2 dividend yield. First Solar, have about 100 shares of that. No dividend associated with it, but pretty good investment so far. Icon Enterprises again, purchased 10 shares and have now 16 shares or so, good for about $130 a year. I've thought about selling off Icon Enterprises. Don't necessarily know why, but when I think I first started investing with them, they were paying $1 a year in dividends. Now they're paying about $2, so maybe not necessarily the worst thing to keep my money in. Here's the other portion of my Main Street Capital, good for about $450 a year. So together, Main Street Capital pays me about $850 a year, which is pretty good. Can't complain with that. Philip Morris, I have about 65 shares or so. South 32 was a spinoff of BHP, which pays me minimal dividends. Verizon, also have some of this in my individual brokerage account, good for about $82 a year. And then I have my WP Carry, purchased about 65 shares, but with reinvested dividends, now have around 75 shares, believe it or not. Yield on cost about 6, almost 7% now, good for about $300 a year in dividends. IRA as a total pays me around $1,800, close to $1,900 in dividends a year, which is pretty good. Smaller account, computer shares, I think this is around $13,000, $14,000 or so in total income. Starting off with Altria Group, which I have in my individual brokerage account as well, close to 26 shares. Started off with 22.2 shares. You can see I've here just slowly accumulated a share or two over time, and then now have just been letting it kind of go wild. Good for about $83 a year in dividends. Aqua America did the same, purchased about a share or so every couple months, sorry. And now up to about 26 shares, good for about $23 a year. Exxon, every time it dips, I will buy some shares. You can see $7 to start off with. Then I'd buy a share every couple months, and then every time it dips, I'll put $500 or $1,200 or however many dollars in. Good for about $300 a year. Yield on cost about 4.6%. Can't necessarily complain with that. IBM, started purchasing this back in the $150 days, about, I want to say 4 or 5 years ago, but holding on to it, about $35 a year in dividends. Keurig Dr. Pepper, still need to make a video about this, about how I invested in Dr. Pepper and then eventually got bought out by Keurig. But anyway, not too many shares of it because a lot of it got paid out in a special dividend. Anyway, still need to make a video about that. $4 a year in dividends, not much. Philip Morris, bought a share or so every couple months, or $50 or so every month, a couple months. Now I have about 22 shares. Philip Morris, good for $100 a year. Realty Income Corp, another little bit, good for about $14 a year. Clorox, I think this was one of my better investments, although it's a small position. Unfortunately, wish I put more in. I think it's almost doubled in cost at the moment compared to what I bought it at. Good for about $20 a year. Unfortunately, wish I had a larger position. Waste management, also one of my better investments that I wish I had put more money into. Yield on cost about 4.3%. Current dividend yield is less than 2%. So it just goes to show you have over 100% return in waste management at this point. Wish I invested more, but it is what it is. Hindsight is 2020. Shareholder services. This is something that I would just not necessarily gamble with per se, but was just trialing out if it was something I want to continue with. AbbVie was originally in my computer shares account. They switched to shareholder services. I have about 5 shares of that, good for about $20 a year. Same thing with General Mills, McCormick, and Procter & Gamble. Pretty small positions. All together, good for around $41 a year. Won't talk about the company shares that I get, but Fundrise recently just started putting in $138, $137 a month. So I'm up to about $64 or so a year in dividends from that, as well as capital appreciation. And then I also have my Cardone Capital investment where I'm supposed to get about a 6% return, I believe. My first check might be coming in September, so keep your eyes peeled on that. And I'll let you guys know when I finally do get that. And then I also have my Amex personal savings account where I host my nest egg. At the moment, it's around $2,000, which isn't much of a nest egg, I would say, but that reminds me. I need to move since I sold my car, unfortunately, because I moved here. Really love that car. I cried. I'm not going to lie to you. I cried. It was a 2009 Chevy Avalanche. Cried. Loved that car to death. Got $9,000 for it, so I need to put that money. Thanks for making me make this video, because now I can remember to put that in there. So this should go up to around $11,000 shortly, not just the $2,000 that's in there, and that should bump up this forward annual payout by, I don't know, $200 or so, maybe a little bit less, maybe $180. But anyway, it is what it is, and that really makes it up for the actual total portfolio value in terms of what I have invested and whatnot. Down here is just me kind of estimating what kind of income I might be getting from my 401k. Who really knows? This is an old, basically me just trying to figure out what I'm getting. Unfortunately, it doesn't necessarily tell me what exactly I actually get in terms of dividends from my 401k, which is why I don't really track it per se. All I do generally is put it in the S&P 500 and continue to reinvest that. But for those of you who missed my video a couple weeks ago, talk about my goal to get around $50,000 in dividend income in the next 7 years or so. That's this graphic. It correlates to the graphic I showed you a little bit earlier where I talked about the $818 or so that I'm supposed to be getting a month. That $818 is equivalent to $12,000 a year, so $1,000 or so a month. Whoops, I messed that up. That $1,818 is equivalent to about $10,000 a month, which is currently what I'm looking at with this green bar. $1,000 a month is equivalent to $12,000 a year, which is my goal for 2020. So hopefully that clears things up. So these two graphs correlate to each other. This one is just by month. This one is just by year. And the hope is by 2026 or even earlier, hopefully, fingers crossed, I'll be able to get to $50,000 a year. And I believe that this isn't too big of a deal because it's around a 28 to 30% increase per year. I've been able to get around a 60% increase per year, but as the portfolio grows, I'm going to need more and more capital. So that means I need to make more money or cut expenses so that way I can continue to invest. And if I'm able to cut expenses, that also could mean that because this $50,000 correlates to around my average monthly spending of around $4,000 a year or a month, sorry. So about $48,000 a year. If I'm able to cut expenses to say $3,000, then in actuality, I could retire with about $36,000. And I say retire loosely because I probably wouldn't retire per se. What I'll probably do is just try to think about something else, whether it's podcasting full time, blogging full time, or even continuing to do what I do, because I really do enjoy my job that I have currently. So anyway, thank you guys for stopping by the channel. Thank you for stopping by Matt Money. If you have any comments or suggestions about other videos you'd like to see, feel free to leave them down in the comment section down below. Oh, and if you haven't subscribed, please subscribe. I generally try to make videos like this once or twice a week. There was a time a couple weeks ago I was putting out a video every other day for you guys because I love doing it. I don't do this for the money. I do it for tracking and documenting my progress. So thank you guys. I'll talk to you soon and see you on the next video.